Hello everyone. In this video, we'll be speaking about non-extractive natural resource business. Uh, this comes under Article 8 of the UAE corporate tax. It is similar to what we have already spoken under extractive natural resource business. Uh, Everything is same except we need to understand the difference between the extractive business and the non-extractive natural resource business. So uh, let's see what are there in the slides. So what is non-extractive natural resource business? Non-extractive natural resource business is defined as a tax as the business or business activity of separating, treating, refining, processing, storing, transporting, marketing, or distributing the natural resources of the state. So basically, it is something other than extraction of the natural resources. So once it is extracted, you will separate the raw materials, refine it, process it, store, transport, marketing, or distributing the natural resources of the state. So here in the UAE, if we speak about the main distribution of the natural resources, we can tell it is the oil, the petrol, the fuel. Now, how the non-extractive business are exempted from corporate tax. Now, first thing first, the business needs to notify to the Ministry of Finance. Okay, so the person has to made a has made a notification to the Ministry of Finance in the form and manner agreed with the local government. Now, again, the person directly or indirectly, okay, if it is privately held or government owned or a joint venture between a private company or a local government, holds or has an interest in a right, concession, or license issued by a local government to undertake its non-extractive business. Now, again, this particular business should be exposed to the local emirate tax. So the person is effectively subject to the tax under the applicable legislation of an emirate in the form of income tax, royalty, or any other form of tax, charge, or levy issued by the respective local government. Now, this exemption from corporate tax is limited to persons that engage solely in transactions with other business, only B2B. Okay. Now, when you're talking about the distribution of the oil should be distributed between business to business. Now, if this particular business is trying to do transactions to an end customer, then such business will not be exempted from the corporate tax. So the exemption from the CT is limited to persons that engage solely in transactions with other businesses, only B2B, as opposed to with the end customer or consumer. In other words, if the person derives income from anyone who's not within the scope of the corporate tax, that is, example, natural persons who do not undertake a business or business activity or form any other person that is not a business or other organized entity, the exemption from CT is not available. Now, if all the above conditions are met, then this business, the non-extractive business, will be exempted from the corporate tax. Right? Now, income from other business apart from non-extractive. Now, what happens if this particular non-extractive business earns any other income apart from the main business line? Again, this is what's this will be the same as what we have learned under the extractive natural resource business. Again, we'll be speaking about the 5% revenue, the other revenues. Okay, so first point, the income from the other business will not be subject to corporate tax if the business to be considered as ancillary or incidental to the person's non-extractive business. A person will not be considered to have earned income from any other business where such other business is ancillary or incidental to the person's non-extractive business. The extractive revenue from such other business cannot exceed 5% of the total revenue. It's the same point we have learned under extractive business as well. If the aggregate revenue from such other business exceeds 5% of the person's total revenue, then such other business, even though it is ancillary or incidental, will be subject to corporate tax. Now, what is ancillary or incidental business? Any income from an ancillary or incidental business would include earning rental income from letting out vacant parts of the property or equipment used in the person's non-extractive business. Okay, so it's a very simple example. It's understood. Now, what are the CT rules between the non-extractive business and the ancillary or incidental business? Again, the ancillary or incidental business should be kept under the 5% of the total revenue. If it exceeds 5% of total revenue, then that business will be exposed to the corporate tax. It won't be exempted from the corporate tax, right? Now, what happens if there's a common expenditure? The common expenditure between the non-extractive business and other businesses of the same person should be apportioned. Now, second point, common expenses that cannot be attributed individually should be apportioned according to the revenue of each business in a tax period, unless the expenditure is taken into account in a different proportion for the purpose of calculating the tax payable on the income of the person's non-extractive business under the applicable legislation of the respective emirate. In this case, the apportionment shall be follow the later proportion. Third point, the person will not be able to benefit from the reliefs of the CT or use losses of the non-extractive business to reduce the taxable income of this other business or join or form a tax group. Where a person meets the conditions engaged in another person, contractor, subcontractor, suppliers, or any person. Now, if this business is appointed any other person, such as contractor, subcontractor, suppliers, or any other person, to undertake any of its exploration or production activities, such as other person will not be able to avail the non-extractive business exemption. So basically, if this non-extractive business is appointed anyone else, okay, and if they undertake any of the non-extractive business, then those subcontractors or suppliers will not be exempted from corporate tax. They will end up paying the corporate taxes. And the income derived by this other person will be subject to corporate tax in accordance with the provision of the CT law. The transactions undertaken between the non-extractive business and the other business of the same person are treated as related party transactions. Last point, the arm's length principle will be applicable to any transaction or dealings between person's extractive business and any other business. Okay, so whatever the transactions happens between the non-extractive and the other businesses. Okay, one thing you have to keep in mind the arm's length principle. Now again, arm's length principle is a different article. It's a whole different subject. But for now, just remember the transaction which happens between the extractive, the non-extractive business and another business. The concept of arm's length principle should be followed. Okay. Now, what are the accounting standards? Now, non-extractive business under the corporate tax law may use any other accounting standards. Now, what does the accounting standard say under the corporate tax? It says that any business whose revenue exceeds 50 million, then they'll have to follow the full IFRS. If any business revenues are less than 50 million, then they'll have to follow the IFRS for SMEs. Okay. However, the second point, however, the other business, other than the extractive business, which is treated as separate taxable business as part of the corporate tax laws, is required to use IFRS or IFRS for SMEs to prepare the financial statement for the taxable activity, even if the conditions of the exemption is met or not. Okay. Now let's see some examples of non-extractive business and other business. I've got two examples over here. I think I've got three examples. Yes. So example number one. Pure Oil is an oil distribution company based in the UAE. The company is involved in storing crude oil and selling to the other business B2B in the Emirate of Sharjah. The license issued to Pure Oil from Sharjah government subject to the company to local emirate tax. Now, 91% of the revenue of Pure Oil is generated from the activities under the license, means license issued by the Sharjah government, and 9% is from the ancillary activities. Now, again, this has exceeded the 5%. So what happens over here? Now, the company has made all the required notifications for federal government, tax authority, Ministry of Finance in a form and manner agreed with the Sharjah government. Answer. Pure Oil's income from its ancillary activity subject to corporate tax, while its income from the refining business is exempt. Why? Because it has exceeded the 5%. it is at 9%. So it has exceeded the 5%. What does it say? If the ancillary activity exceeds 5% of the total revenue, then the ancillary activities will be subject to the corporate tax. Example number 2. Same example, again, just we are changing the percentages over here. Now, in the previous example, this was 91% and this was 9%. Now this has become 95 and this has become 5%. Okay, so 5% is from ancillary activities and 95% of the revenues are purely generated from the activities under this license. Now, straightforward, what is the answer? Pure Oil's income from its ancillary activities and its refining business is exempt from corporate tax. Why? Because the ancillary activities is at 5%. It does not exceed 5% of the entire revenue. So that means both the non-extractive business plus the ancillary activities will be exempted from the corporate tax. Example number 3. B LLC is a downstream oil business in the Emirate of Abu Dhabi. The contract between B LLC and the Emirate includes a provision for the Emirate to levy tax. So B LLC is being charged by the Abu Dhabi government. 99% of the B LLC revenue this year was generated by its downstream activity under this contract. B LLC other activities were ancillary to its primary operations and supported its work under the contract with the Emirate. Since B LLC is taxable locally and since its other activity were both ancillary to the contract and contributed not more than 5% of revenue, B LLC will be exempt. Thank you for watching.